Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, September 9th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Pretty quiet here in pre-market and overnight trading. What you'll notice here is that price has mostly gone range bound, sideways to up, but the price range already heading into RTH is only 23% of normal. 23%. We have an 11.5 point range. The market has been averaging, the ES has been averaging 49 points on a 10-day range basis. So if you're averaging the last 10 days together, you're getting 49. If you look at just the last 5 days, it's dropped to 35.25. So volatility has dropped. We knew that would be the case with the holiday shortened week. But now coming out of that here with this 2-day narrow range, we could be looking at some significant near-term expansion. So again, is it likely going to be to the upside? The way that these markets have broken this range here to the upside is pretty bullish. And any pullback here into the PIMA trigger zone could provide an opportunity to buy it for a shot at reaching even higher. I would say if there's a failure to hold 29.50 though for an extended period of time, that could cause a rotation back down again toward 28.20. For right now, very narrow range heading into RTH, just 23% of average. We could see more range bound action, but once we get a breakout from that range, it could be a significant expansion type day. All right, let's take a look now at the NQ. You'll see here the NQ looking very similar to the ES, but the range is even more narrow, 21% of average. It is an inside day so far. Very, very narrow range after a big push up. Nothing on the economic calendar for today. So the first thing that comes up on the economic calendar is for Tuesday's market. So there may not be a whole lot of catalysts here, but we may see further range bound action for a while. Once we get a breakout from that range, it could be significant again. Again, very similar to the ES, if this were to break down and reject, that could be a great buying opportunity for a stretch to new highs. I would say a failure to hold 77.70 would suggest a bigger rotation to the downside. So it could get down below it, but it's got to pop back above it. If it can't pop back above the 77.70 or 7800 zone, then we could be looking at a rotation back towards 7400. All right, let's take a look now at crude oil. You notice here with crude oil, this one formed a rejection tail, bearish one on Thursday, a bullish one on Friday, and here we are kind of stuck right at the middle of that Thursday rejection. This is very interesting here. This market has been compressing tremendously. So if you look at this range from here to here, quite a bit of compression here. Additionally, this market has had a tough time breaking through these upper trend lines here. This market has found resistance at 57s and has rotated downward on 57s in the entire month of August. That was the first trading day of August. Below 57s, rejection at 57, just shy of 57, above 57, and here we are again right at 56.96 at the moment. So that's been a very impressive area of resistance, and when you combine that with this overhead trend line here, the market has turned down off this trend line many times. So again, can the market find acceptance above 57s? If so, perhaps there's more upside toward 61, the recent pivot high here. But again, this market is going into a part of the season here where this price tends to push lower into the end of the year. So beginning in the last week of September, first week of October, that seasonality usually kicks in. But again, you can give or take a few weeks here and there, and it doesn't always turn out to be perfectly the way the seasonality turns out either. So again, just keep that all in mind, but the expectation is for prices to drop at the end of September and heading into the end of the year. And so any pullback up here or rejection up here could be an opportunity to sell it higher for a shot at pushing this thing down. So just keep that in mind. Right now we're just trading 33% of average and we're hanging around that 57 level. Failure to hold above 57s could rotate this thing back down. Above 57 again is going to get very, very interesting. Okay, let's take a look lastly here at gold futures. You'll notice here with gold, this one's pulled back very nicely to the pivot range for the month. It's also hanging out inside the PIMA trigger zone. Again, this one has had very few pullback days, and after a pullback day it tends to bounce pretty quickly. So right now we've had this uptrend intact, and again you can see not many pullbacks, 1-day pullbacks or a few day pullbacks, and then this thing just jumps right up again. So this market may be due to bounce again. If it doesn't bounce, again here's 1500 right here, if it doesn't bounce off of this zone, that could be significant. We could see a pullback that takes us back to 1450, 1425, or retest that 1440 FOMC key level. But again, we haven't seen that type of weakness out of this market in a very long time. So the expectation is for another bounce out of this one. Although, again, it wouldn't surprise to see more of a test inside the pivot range before we do see a bounce. But again, the idea here, buy the dip for another push higher. 1585 to 1600 are the two upside targets. Alright, that is it for now. We'll see how this plays out heading into the new session and week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.